Hello and welcome. Welcome to our Innovator webinar. So today we'll be exploring how alternative layer one blockchains are capturing institutional market share. I'm very excited to be joined by Johnny Garcia from VeChain Foundation, Howard Wu from Aleo, Ivy Kang from Plume Network. And before we get started, as always, gentle reminder that none of the information or the content contained in this webinar is intended as investment advice. It's all for informational purposes only. And with that said, let's get into it. So, very critical moment, and we've seen a lot of the market moves these days. The growing impact of institutions and big institutional name coming into the space, and that's why we're here today. So without further ado, let's open up for introduction for everyone on the panel who wants to start.
Yeah, I'll go ahead. So I'm Ivy Kang. I lead the capital markets side at Plume Network. Quick introduction on Plume. We're the leading RWA chain focused on tokenized assets. Our specialty really is bridging the gap between traditional asset managers, banks, institutions, helping them get on chain, and then focusing on distribution across our millions of users. We currently hold the largest amount of unique RWA holders on any chain, and we are backed by some of the largest institutions, including Apollo Global, YZ Labs, Brevan Howard, and Galaxy Digital. And yeah, we're based in New York. Been building Plume since 2023, and excited to get into this.
Awesome. I'll jump in.
Howard next. Yeah.
I'm Howard. I'm the founder of Aleo, and Aleo is a layer one blockchain that introduces private smart contracts and compliance into the market. In fact, we are the first programmable privacy layer to go out there, and our focus has really been around private payments, around stable coins. We're very excited to see where this market is going, especially with the privacy narrative now as we go into 2026. And we are a very strong U.S. foundation with the U.S. labs. And our focus right now is really on just bringing this technology into the market.
Awesome. So I'll bring up the rear. My name is Johnny Garcia, and I lead our institutional growth efforts here at the VeChain Foundation. So VeChain, for those of you who are unfamiliar with it, has been around for quite some time. We're officially one of the OGs effectively in the space. So we've been building since 2017 when our first Genesis block went live. And the journey has been, although long and arduous, it has been quite exciting, right? So we started primarily as an enterprise-focused blockchain as a solution or service platform, and we've since migrated towards effectively thinking about all the unique primitives that have evolved over the trailing sort of 8 years or so in operation to think about how do we engage end users where they are in a very native and normal experience, sort of abstracting away the Web3, all the things that we've come to enjoy from a Web3 perspective. So VeChain's been building since 2017 from a range of different applications, from enterprise blockchain as a solution to external applications using a motivation where you activate folks to do real world activity and reward them using crypto native rails. So that's us here at VeChain.
Awesome. Well, thanks a lot for the quick intros. And as to start this discussion, I want to look a bit, zoom out a little bit, look at the market landscape and all the institutional momentum that we've been seeing. Just before this show, we were discussing on the California tech versus New York finance, and how over the past years we've seen crypto companies moving from SF based to more New York to really be part of that institutional game, but still, like a lot of the tech builders are still in SF, right? So where are we at today in this institutional blockchain adoption cycle? What is driving enterprises to evaluate Alt-L1s, versus staying on Ethereum or using permissionless solutions, if you want to be controversial, also versus using more permissioned solutions?
I mean, I'll jump in and just say, like, I think one aspect I've noticed in this past year has been from my conversations with dozens of financial institutions that they've recognized privacy is a really big component that does not exist on existing L1. So when you look at Bitcoin, Ethereum, Solana, these are blockchains that were built over a decade ago where the architectures are fully transparent. Everything is out in the open. And as you know, kind of real world finance does not have this this type of property when it comes to the UI UX of money. Money itself is inherently a very sensitive topic, especially when you're talking about businesses and business revenue, business intelligence. And oftentimes businesses need this concept of some type of privacy or confidentiality to enable compliance for themselves and for their customers. And so this is an area where we think new types of L1s, L2s, architectures in general are going to be supporting a part of the market that has been completely left kind of in the dark, as I like to say. And like, you know, the analogy I like to draw right now is that we're in this very early phase of transitioning into a new cycle of blockchain architectures where you're going to start to introduce privacy. You're going to start to introduce a spectrum of it. And I think that people are going to get very creative about what's possible. You know, right now, I think there's been a lot of exploration, especially with new types of approaches, whether they be permissioned or permissionless. But I think where the market will end up settling is recognizing that there is a lot of value propositions with permissionless chains, but they're going to need some type of privacy to enable their use cases.
Yeah, I think I agree with that. I think, you know, we've seen a lot of permissioned chains try to tackle the market, especially in the last cycle. I think, you know, what the problem that they always come across is how do we solve for this issue of getting users? Because when you're a permission chain, you're focused on, you know, onboarding individual users. You know, that might not be your company's or your focus skill set. And with permissionless architectures and blockchains, you really have this broad network effect. So if you look at how even Ethereum scaled up, you know, in the early days, it was really driven by this kind of amplifications of permissionless dApps building on top of, you know, this value prop and this value chain that allowed for the growth of, you know, Ethereum to be the most widely adopted chain today in the market. I do think there is value in having, you know, Ethereum as kind of a settlement layer. You know, Plume is still right now, we're an L2 focused on migrating over to an L1. But we believe that, you know, Ethereum security and its provability and also its track record really speaks for itself. And so I think it's a bit early to see how, you know, some of these enterprises adopt, whether it's, you know, they go fully L2 or they go fully L1. We've been seeing some, you know, stablecoin payment companies, you know, specifically we saw Stripe getting into the market with their own blockchain called Tempo, right? And so I think these institutions are getting smarter about, okay, like where can we find this value capture? Is it at the transaction level? Is it at the privacy level? There are benefits to owning your own blockchain. And so I'm very excited to see how this plays out. But I think, you know, we're seeing this dichotomy of, you know, enterprises and starting to launch their own networks, which is interesting.
I genuinely probably don't have much to add. I think generally speaking, you know, what we've heard is a combination of, you know, privacy continually being a point of importance, has been since day one. But the solutions have just not incrementally, but exponentially have gotten better.
Yeah. So let's dive into the solutions. I think that's the very exciting part, right? Like, so what real world problems do each of your platforms solve for institutional users versus legacy approaches? You know, whether they're traditional databases or even other blockchains, right? What do you guys solve that others cannot address?
So I think from a user journey standpoint, you know, I've emphasized that the UI UX of money is broken in crypto and in Web3. And what I really am alluding to is this idea that a lot of financial applications, whether they be payments or payroll or trade finance, really require some level of confidentiality for that user journey to work. If you take, for example, the classic analogy or common analogy of just looking at a point of sale terminal in a coffee shop, when you want to tap to pay, there's an expectation that there's some level of privacy in terms of what's being transacted or transferred and information. And so when a customer comes in and buys a cup of coffee, they're not giving you all of their information about their financials. They're just giving you the $3 for that cup of coffee, right? And like, you know, the merchant is not revealing any information about themselves to the customer as well. They're just providing a service or a good here. And so, you know, from that point of view, if you were to tap to pay with a USD stablecoin today, one of the key problems is that you will reveal your address to the barista, to the vendor, to the merchant, and they will suddenly see your financial statements effectively. You know, by knowing your wallet address, they can see how much money you have, how much you make, how much you spend, where you spend it, all this information. And it's a treasure trove that you opted in to letting them actually track you for the rest of time. And I think
I'm sure you don't want everybody to know that you like rainbow sprinkles on your latte, right?
Exactly. Well, you know, this is just a very different type of user expectation, right? And then, you know, when you think about it from the coffee shop's perspective, you know, they're looking at it from a different lens. You know, they're saying, wow, every customer that comes in learns my wallet address, and suddenly, you know, for the price of a cup of coffee, my competitor could also walk in, and they can now, for $3, buy access to how many customers I have every day, how much each customer is spending, how much I'm making this week over last week, this month over last month, this quarter over last quarter, and they can start to derive a lot about my business, right? And so this starts to really show some of the cracks in terms of how, you know, transparent blockchains have worked to date. And I think that when you look at where we're going, you're going to have to introduce some level of privacy for these merchants and for these customers. And so this is where I really think privacy starts to introduce a very strong value proposition for, you know, for these enterprises.
Yeah, the one thing that I would add is, look, again, we've been in the space for quite some time. So my point of reference is less around case studies and more around just real lived experience. So we've gone from, I'll couch that in the following. We've gone from permission to a permissionless. It's one of the main actual events that took place earlier this year. We operated under what's referred to as a proof of authority consensus mechanism, where largely meant that there was a cohort of folks, a steering committee, who would approve folks who were privileged to seeing transactions in the space. We would ourselves would sort of facilitate the AML KYC, and then notice, as was mentioned earlier, I believe by Ivy, that so the market has moved in this direction of permissionless and decentralization being a not only, like, I think ostensibly before it was a point of pride, but then also just an absolute necessity for these things to provide all the benefits that we've spoken about: scalability, privacy, things of that nature. And so the way that we've come at this is not every blockchain, not every provider, just like any other solution, is going to be a one size fits all. We have tackled this historically from the perspective of supply chains, from the perspective of chain of custody. So you can think of this as, you know, providing sort of proof of authenticity for Lululemon retail items or for Louis Vuitton high luxury retail bags, to, okay, how now do we use all of the primitives and all of the sort of benefits that we've discussed so far on this call to actually drive the things that matter to the end client. So think of B2B to B2C. In the instances that I've just mentioned, right, there is a relationship that to be had between vendor and purchaser, or end client and user. So how could we possibly incentivize folks to either drive customer engagement, drive customer acquisition and retention? These are the sort of conversations that we're having directly with our enterprise clients, who are primarily focused on providing some sort of product in exchange for, commerce. And the way that we've done that is vis-a-vis our bebetter.com. And this is a platform itself, for instance, that incentivizes people to do certain actions that are consistent with a specific enterprise's business. So we'll take, for instance, you know, Build Your Body, for instance, which is, you can think of it ostensibly as a guided workout AI figure that's connecting UFC consumers, or folks who you would potentially pocket in that 900 million, roughly almost billion consumer group, to rewards and loyalty programs. So how do they continue to engage them above and beyond a specific event like a UFC fight? How do you move beyond what we see with QR codes, things of that nature that are floating around on the screen on the TV, to instead incentivize folks to feel like when they walk away using this product, that they've done better for themselves, for the world, or for the community? And these are the things that we've been focused on in particular, of how communicating the actual sort of economic and commercial benefit to enterprises, while also preserving the importance of things like privacy, security, and other operational risks that are paramount and are not going to change for large size businesses and enterprises.
Totally. And Ivy, what about you guys at Plume?
Yeah. When we started Plume, we had one mission. It was really just to make RWAs, whether that's tokenized stocks, 40 Act funds, ETFs, make them accessible to the average user on chain. One, because, we saw that with how crypto was globalizing the financial economy, one day that a lot of the activity on chain would turn from speculation, meme coins, into something more stable. And so, we saw that the financialization and tokenization of these traditional assets was really, in our view, almost, where the blockchain industry was going to end up. I think, coming from my background comes from, working at a large, asset manager. I firsthand saw how large these assets, these institutions were, but in the back end and how they were operating these products were so inefficient. And so, blockchain was kind of a natural fit for how you can basically reduce operational errors, distributions, make these products a lot more accessible to the average user. We saw that that would be transformative to what we're building, and that was really the vision of Plume. I think today, now that we're 2 years past, what I've seen is that these yield sources, these products on chain, are actually a true necessity for the on-chain economy. I think especially what happened in October, where you're seeing a lot of recursive looping of stable coins. You have stable coins that are not stable coins. They're effectively speculative assets masquerading as stable coins. Solved really the lack of regulated and institutional grade safe products. And so what we're now, our kind of message to the market is that, we're bringing the most high quality assets on chain that's accessible to all. And so we've made this permissionless architecture at the chain level. I can dive deeper into that later about how we make these products, done with no KYC at the end user. It's instant and it's also very liquid, meaning that you can take these, assets and take them around DeFi, take them around lending, borrowing use cases, add them to an AMM and earn yield. There's a lot of really cool use cases that I think we're adding to RWAs in general. But overall, it's really just to increase the distribution of these assets globally. And so we have around 280,000 unique holders on Plume just holding tokenized RWAs, whether those are money market funds, ETFs, credit instruments. We've really found strong product market fit with how we've approached, building Plume and the dApps and the main, I guess like third party, applications on our chain. And so can dive a little bit more deeper about the architecture of Plume because I think it's quite interesting. But yeah, that's kind of our main value prop today.
Awesome. And there's always let's get this out of the way. There's always the big question, right? Of like, what is in terms of competition? How do you approach that? Do you think you're competing for the same institutional budget? Are you targeting fundamentally different use cases for your own respective networks? How do you think about competition?
I think what we're building is really complementary parts of a much bigger stack than I think any one of us really realize. And I think a part of this is the fact that we recognize that finance itself is quite a complex system in and of itself. And when you look at, for example, what we're doing on Aleo, this is a privacy first infrastructure. And what we've really been focused on is ensuring that on the base level, we have the foundations to enable the full spectrum of privacy, from everything that could be fully private all the way to everything that can be fully transparent. The idea of introducing private smart contracts really is to allow for developers and for builders and for companies to choose what they need to be sensitive and what they want to be fully public for people to see. And that's something that I think enables all sorts of providers and integrations into a stack like this. For us, certainly being in the Web3 ecosystem and landscape, it's inherent in the name that it's a web. We want to be connected to different ecosystems. We want to be out there, and I think what we offer is something very unique to what already exists out there in terms of other L1s that have been in the market.
I would completely agree, Howard. I think our view here is that everything that we're building is complementary and it's not combative, right? I don't think fundamentally that's been our approach here. I mean, so beyond sort of the technology being what the technology offers, if also the long sort of held view is that this is a growing the pie sort of mechanism, then when you start divvying it up, you actually just increase more complexity unnecessarily into the mix, which then also introduces additional operational risk, additional security risk, which then becomes just a non-starter as it relates to trying to receive enterprise specifically, and also more importantly, on the IB side, the institutional adoption, unnecessarily so. So, I mean, we've historically always taken much more of a complementary, collaborate and cooperate versus seeing us as combative. Now, to your point, as what are the points of differentiation? I think this is perhaps what also matters importantly, which is everything's sort of downstream of bringing assets on chain from our view. So what does that mean? I mean, assets, yes, financial assets, but then beyond that, it's also it's users, right? That this technology will only become better and more useful the more that it becomes diffused in different ways that folks just don't even understand or know that it's being used. Whether it's again the privacy component, whether it's again the token itself. We've gotten that question all the time, particularly from enterprises. Why do you have this token? Why should you put it in play? So yeah, the point here is that we take historically a collaborative, cooperative point. I see you, Sacha, getting ready to give me the little broom here. No, but I just really wanted to drive that home. That our points of differentiation is primarily how easy is it to use the technology without actually knowing that.
Yeah.
Or having a state requirement to know what the technology is.
Yeah, and the thing I was going to say is, I think the answer from all of you guys, I mean, it's pretty much the answer is simple. It's the old adage: losers compete, winners collaborate, right? And if you want to grow the pie, that's the only way to go.
Yes.
Yeah, I mean, I'll just do a quick plug. We just announced a big partnership with Solana. So one of our dApps that we built are our Nest vaults. This is really the cornerstone application on Plume that is built in-house by our engineering team. We brought that to Solana with the help of Layer 0. So I think what we want is to really just increase the TAM, and that means working with some of the best chains that have been here longer than us to get their support and get their distribution and bring high quality assets to their users. So I think always collaborating with some of the chains that have done really well or have just phenomenally bootstrap their users was always great for your business.
That's a great plug. And well, so I'll use that as a segue to move on to traction, growth metrics. What are you looking at in terms of KPIs and what has happened over the past year or so? So maybe let's start with you, Johnny, at VeChain. You guys have processed more than 530 million transactions, and basically 100% of time since 2017, right? And you've had tons of partnerships. Can you tell us more about what these KPIs are, what you track, and how do you look at future production deployments and your discussions you're having with institutional prospects?
Certainly, yeah. So I will offer this a bit of a history. I'll be quick, be brief, and then I'll be gone. And then I'll sort of fast forward to where we are current state. But the historical take here, just as a reminder, right? We've been primarily focused on bringing enterprises on chain. So how do we spotlight and articulate this technology in a way that's uniquely attractive to addressing the issues that they had? The items that I did mention earlier were primarily addressing issues like chain of custody, authentication of certain private goods. As you can imagine, for a high luxury retailer, counterfeits is an issue, and
Mm-hmm.
Increasingly so. It's kind of like cybersecurity. Like, they find a solution, and you have to find another. They find a something to extract, or sorry, an attack vector. Then you have to plug the solution. So this is one of the things that we have been focused on. The next natural.
Feel free to name drop there, by the way. Totally fine if you want to name drop.
Yeah, I mean, look, these are as I mentioned earlier. LVMH, we had or sorry, not LVMH, Lululemon, we had announced maybe this is all public, right? These are folks that we announced maybe a month or so ago. But then we've got some folks who've been with us since 18 thereabouts. So Walmart, Louis Vuitton, and that nature. But naturally, what's downstream of that is, okay, great. How can we now diffuse this technology into the user's hands? And we had to. And that takes time, explaining the usefulness and how we ourselves can leverage existing technology, things like tokens, governance, and all that jazz, to actually enhance their business outcomes. And so in that was born vbetter.com roughly about a year and a half ago. And this has been really a B2B2C or a direct to consumer platform, depending on which angle you're coming at it from. And for us, that's been keen to sort of the next major component that we're looking at, users. So, we've since added some 5 million or so new wallets. We've added, an additional 23 or so million transactions, but these are actions that people are doing in the real world. We were integrating, AI in the form of taking photos of, this is not a reusable, it's a glass, so I guess it's reusable, but a reusable mug for your coffee. And then we're rewarding you in the instances where you're using that at a Starbucks, a coffee, Lavazza, Coffee Nero, as opposed to purchasing the paper cups, right? So solving real enterprise issues while also enabling folks to actually deliver against their own personal commercial goals has been one of the things that we've been dedicated to since the very beginning. And the way that we measure that is activity and users, and showcasing that in a way that is attractive to back to the enterprises, and it's sort of this virtuous cycle.
Yeah, I would say for Plume, the KPIs that we look at certainly are, how much TVL do we have in these assets, and I think a lot of people look at this headline figure of value tokenized, which is, I would say, a little bit of not misleading, but I would say it's not accurate of results. I think a lot of asset managers and institutions are looking at, okay, well, we can bring on tokenize $1 billion worth of this asset, but how much is on the other side? Are people actually buying it? And so, that TVL figure is one metric that we really look for. We're not really looking for volume, mainly because we're working with investment products. So unless, we're focused on high frequency trading or other trading use cases, it's a little bit less, of a focus for us. I would say the other one is, what is kind of like the distribution of users. So we love to see, smaller wallets holding, smaller units of, or smaller dollars of, so these RWAs, because it means that, these assets are interesting to them. And then also, it's kind of proving our point that, these assets should be accessible to, users from emerging economies, smaller economies. So those are really like the main KPIs, I would say. Obviously we look at, stablecoin, TVL on Plume as well. I think, stablecoin TVL is a really interesting metric for us because eventually, these will be deposited into RWAs. And so it kind of can almost be as a leading indicator for, flows and also outflows as well. So, yeah.
Awesome. And so Howard, and Aleo mainnet was launched in September 2024, right? And you have since there's been more than 650 applications deployed during testnet. And so for a privacy network, what metrics do you think best indicate both adoption but also institutional readiness?
Yeah, so we launched last year with Coinbase in September of 2024. And a lot of our focus as a new layer one is really getting ourselves connected and integrated into the various systems and stacks that are out there today. A big part of our focus over this past year has been really around wallets, stablecoins, and bridges, and bringing on name brand partners to really start to integrate privacy into their stacks. We were very excited. 2 months ago, we just announced USAD, which is the first private and compliant stablecoin to come to market in crypto period. We've been working with Paxos on that front. And then just last week, we just announced with Circle the launch of USDCX, which is also Circle's first private and compliant stablecoin as well into the market. For us, a lot of the focus really is on looking at how institutions want to be able to plug in. Institutions want to be able to do business based on their expectations. They don't want to have to rework their systems just to benefit from Web3. And private stables like USDCX, which have all the risk mitigation that Circle has built, but now also offers this shielded ability with privacy tech from Aleo, allows us to finally bridge that gap that we've been hearing from all of these companies. And so, for us, it's really about looking at where this goes from here. And, we've been starting to dive much deeper onto the payment side of things, whether it be with payroll providers like a Request Finance or a Toku. We've also been looking at the NatSec space with companies like Laborist, and also looking towards like NGOs or humanitarian aid organizations like with Mercy Corps. The goal for us really has been to grow the breadth and depth of where we can plug in and integrate private stables and private payments into the user journey, where crypto has not been able to venture into thus far.
Yeah, and if we look at Plume with Ivy, it's been really impressive, right? Like, went to number one in terms of number of holders globally, like above of Ethereum. If you look at RWA.xyz, right, 280,000 plus holders. What has been driving that rapid adoption, right? How do you think about that? What do you think has been behind this growth?
Yeah, I think, it's really, two things. One is we structured the chain where we are compliant and we fulfill the requirements of institutional asset issuers. So I think we do AML at multiple levels on the chain. So before users bridge on, we're checking with TRM Labs against all their anti-money laundering lists. Even at the vault and investment level. So I think when users are actually doing an action on Plume, we're also checking, again, thanks to our partners and friends at Predicate, which allow us to build compliance logic at the smart contract level. This fulfills, the highest of institutional requirements for a lot of these global asset issuers. And so, we abstracted that away from the user. So instead of the user having to test, whether that's filling out forms or signing other transactions, we actually do this at the chain level and abstract it away from the user. And so that's one piece that we lifted that makes the user experience very, very seamless. It feels like they're bridging onto another permissionless chain. So it feels like they're bridging onto Arbitrum or Polygon or Solana. And then the other point is that I think we've made these tokens, so we call them like liquid RWA tokens. We made them really accessible, but also useful. So we've seen usage from a lot of our users come to get some RWA yield. We're giving them access to some of the highest quality asset issuers, but also allowing them to stake them or use them in lending markets to get, use them as collateral, allowing them to, take these assets and make them useful, similarly how they would do this with any other crypto asset. So I think that's been a really interesting driving point, at least to grab our first, I would say, a couple 100,000 users. We've really, our team comes from a background of both finance and also crypto, crypto hires. we really, understand kind of like the I would say the wants and kind of the behaviors of on-chain users, and just, plug the yield source in the back end to an asset issuer. And so I would say those are the two main points, is like, just the very smooth onboarding UX, and also the utility of these assets have really helped us climb the leaderboards to the top.
Awesome. And another quick question, because especially in crypto, development cycles are really quick. You build a product, you put it out, and you get a lot of retail users. As we know, it's very different when you have to deal with institutions.
Yeah.
So quick fire round, like what would you say is the timeline, like evaluation to deployment, right? Going from a pilot to production. What does that look like for institutions and enterprise solutions? That's for all of you, by the way. Like anyone, feel free to chime in.
It's not gonna be a satisfactory response. I know it's quick fire round, so I'll be brief and then I'll be gone. It's not a one size fits all. It all depends on who it is, and it also depends on the channel on which it's sourced. I think the size of the opportunity, the level of risk that's being exposed and or explored, largely dictate how quickly you can get something to market, right? So we have folks that we're chatting with on. It's funny, we were using, and this is not a shot across the bow, but RWA before, RWA became what it is present day, which wasn't real world. It was like real world activity is how we were describing it internally always. So it's kind of interesting to see the latest. But we have had also conversations with RWA and the latest sort of conventionally accepted description of it, platforms that are looking to offer private credit and the like. And that is a very different conversation than one that's been sourced from our partnerships with with BCG. And we've got an app that's got 2-3 million users that are snapping photos of their reusable mugs. And now we're having a conversation with a specific coffee vendor of sorts, right? Like that timeline compresses because of the way it was sourced. Applications there, the plugins are easy versus trying to build something from scratch for someone who's looking to offer private tokenized, credit or something, right? So that's been our personal experience. It depends, not a one size fit all.
I'll just say, like, we meet our partners where they're at. Some are just running and ready to move, and we'll move as fast as they'll move. One of the things that I will call out is that we've really thought carefully about how we can do the integration successfully and how to do that very seamlessly. And one approach we've really taken is to bring about as much APIs and as much kind of traditional Web 2 rails into that user journey to simplify the actual process of getting from an evaluation into a deployment. And so, while I think a lot of teams in Web 3 have really focused around trying to get them to plug in directly onto the stack, right? Smart contracts, all that. What we've found is, especially for these privacy preserving user journeys, there's a very common set of expectations of what these partners are looking for. And so from that, we've been able to establish some very common APIs and interfaces and SDKs for people to plug into. And that has actually helped to accelerate the timelines for integrations. And that has been something where, I really say, like, it could be as quick as a single week, where you can get from like a Hello World example to something that is ready to be used on testnet. But ultimately, it comes down to the pace and the readiness of the team that we're working with.
Yeah, I think there's like some partners that we've been working with that will at this point have been taken 2+ years. There's other similar their counterparties moved as fast as like 2 months. So it really depends on the sophistication, and also I think leadership buy-in is incredibly important at these places. I think if it's coming from the top, things will move very quickly. We've done very vanilla tokenization pilots, but we're actually taking it a step further with some of these partners. We're introducing them to DeFi concepts, and that takes a little bit more time because there's a compliance aspect. There is a research aspect, understanding these are new concepts for a lot of these digital assets teams. And so, that part is taking a little bit longer. But I would say, in general, I think just the overall sentiment and the willingness to participate and, do these pilots have been incredibly, 180, even over the last 2 years.
Awesome. And speaking of those pilots, let's talk about like some of the really cool stuff that's being built, and where like important developments and strategic upgrades that you guys have been working on. So let's start with Johnny on VeChain, and if you could tell us a bit more about the VeChain Renaissance initiative, what it's meant, the different phases, what capabilities it's been added, and which of the phases matter most for the enterprise users.
Yeah, this is going to be a very boring response, which is I referred to it earlier, referring to our sort of transition from in-consensus mechanisms from a proof of authority to a delegated proof of stake. That was largely what Galactica and Hayabusa. It's not an inconsequential change, but it is more of a moving towards where the market has accepted, both from I think there's one can argue from the regulatory side of things whether it's sufficient decentralization and then but then also just the effectiveness, security of the blockchain itself. So moving in that direction. But then two, I think also codifying something that in our view is representative of the state that is a blockchain, right? Which is that there's users who should own their information in and throughout, while constantly being or in and throughout whenever on chain or online, we'll call it. There is a steady state of folks who provide assets on chain, and this was really a codification of that, right? So in our view, as I mentioned before, like enterprise clients didn't want just anyone processing transactions and being privileged to the things that we had privilege to as it relates to the food traceability items that we were doing for Walmart, the gloves that we were doing for UFC, right? Maybe less on the UFC, but the bags that we were tagging for Louis Vuitton. Yeah. I think all of us would probably come to an agreement of clearly you don't want just anyone processing that. But now future state is that we do feel that is a role that is satisfactorily should be handled by qualified institutions who can meet all the requirements that are necessary to be able to perform the technological output, right, of validating transactions and all that jazz, but then also preserve the required privacy that necessitates trust in everything else that sort of falls downstream from there. So that was really the update. It's not an incredibly exciting update, but it is meaningful and was not an insignificant lift. I think the takeaway is just it was really sort of a codification of our view of everyone plays a role, users, folks who obviously are validating in transactions, institutional capital, if you will. And this was a way for us to sort of compartmentalize in a certain way where we thought those things should be plugging in and then playing nicely into the VeChain ecosystem. So that's really the response. Not that exciting.
I think it is exciting. But okay. So, and Howard, you mentioned.
I'm glad you think so, Sacha.
It's finally coming. It's like all the pieces finally coming together, and like all the friction is being alleviated. And speaking of which, right? If we don't want people to know that I like my rainbow sprinkles on my latte, Howard, you announced you mentioned the partnership with Paxos with USAD. Currently, less than 0.01% of stablecoin activities, basically nothing, is currently encrypted. What institutional pain points do you address with this?
Look, let's zoom out for a really quick second and just look at the broader ecosystem and the broader web as a whole. When you look at the early internet itself, we had this massive transition from this HTTP to this HTTPS moment. And what did that really unlock for Web 2? Well, it was this ability to suddenly put in my credit card details on a website and be able to actually click checkout and know with confidence that this information is only being shared between myself, a secure payment processor, and the merchant, right? And that was a huge unlock for the web. This enabled e-commerce as we know it today and created trillions of dollars of value. I think what you're looking at in Web3 right now is the same transition starting to happen, namely that, we've had for the past decade this idea of a transparent blockchain where everyone can see everything. And now all of a sudden, this idea of privacy is coming into the picture, and we're starting to introduce encrypted transactions where your actual assets, your data can be confidential. And that, I think, is going to create a massive unlock of value for Web3. And I think that this is where private stables is a perfect example of what is going to be the cornerstone towards that transition. When you look at where stablecoins were in last year, we did $27 trillion worth of settlements on transparent stable. And that's a huge number. But when you look at the global banking system, that number is actually quite small. And so, I think this is starting to demonstrate that, crypto itself has been almost like this very small toy example where we validated that the technology can do what we want it to do. And now it's really time to go and integrate it into real world systems such that, people like my mom and dad will start to use these rails as well. And I think for us, the key thing with Aleo that we've been really focused on is looking at how do we integrate these systems without having to rework systems just to benefit from these properties of Web3. And so, we're now able to offer institutional partners all the security and peace of mind that comes with existing systems, but with the flexibility, the speed, and innovation that Web3 has been promising.
Totally. And what about you, Ivy, at Plume? Seeing, building real solutions, getting them compliant. You became the first blockchain native entity registered as an SEC transfer agent. What does that mean? Right?
Yeah.
What does that mean? How has it changed the conversation you're having with institutions? And what additional licenses are you pursuing? What's your strategy there?
Yeah, so I guess that's the kind of is like the big news for us this year was the SEC approval of our transfer agent, specifically as it relates to 40 Act funds. So think investment companies. A lot of other firms that operate in our sector have transfer agent for securities, which is or equities, which is a little bit different than what we're trying to do. But I think for us, this really legitimizes the products that we're building, both at the chain level and then at the vault level. When we were working with a lot of different issuers, we noticed that, okay, well, we're really great with helping them get this distribution and growing their asset on chain, but there's still this disconnect between when assets are tokenized. It's almost it's not compliant, but it's an imperfect match or twin to what exists off chain and how these securities are recorded. And so now that we have this transfer agent, it allows us to, in a legally binding way, allow us to manage off-chain, on-chain records with the underlying cap tables of these issuers. So, we created transfer agent protocol, which has this TA license now. This protocol has the smart contracts that do the accounting, the investor management, that feeds into our Nest vaults. And so we have this now, I'll just simply say we have an end-to-end solution from, originating these assets to distribution. And these databases that, we're building on the TA side can now be piped into the DTCC and the SEC for formal reporting. And it legitimizes a lot of the work that, we're doing today. So what does this mean for Plume? Well, now it means that we're no longer just a chain. We're targeting the, $150 trillion fund admin space. And now, this space is historically very lucrative. They're charging, lots of fees and percentages off of the assets that they manage at these fund admins. And so with the sophistication of blockchain tech and what we're building on the fund admin side, we can now offer the same use case and also services at a fraction of the cost, built on best-in-class technology. And so I'm really excited about where we're going with these licenses. I can't speak to what we're going to get in the future, But we did also just announce commercial license in Abu Dhabi at Breakpoint. So that was really exciting. We're, seeing a lot of strides being made in different regions. I will say the Middle East, Abu Dhabi, the financial authorities are very, very supportive, and that's reflective in, some of the legislation that they passed on tokenization. And we're seeing the same thing in Hong Kong as well. So for Plume, like, our vision is just not in the States, but also operating globally. And so, we'll definitely have a lot more news coming out in 2026. But, I think this is definitely a great start for us.
And moving on the other side of you mentioned not, but a lot of the US part, but like also in Europe, they've been very early on providing regulatory clarity with MiCA, or MiCA, as some people say. And I think, Johnny at VeChain, right? You guys have worked on the compliance with and you've established European headquarters in San Marino. How has it been shaping the conversations you have in Europe?
Yeah, so I mean, aside from San Marino being very beautiful and not like Philadelphia right now, no, it's honestly it's been a breath of fresh air. I think the thing that I would sort of really characterize here is one of the things that we have prioritized from the very beginning is to when and where appropriate, and if applicable, be compliant. And so for us, we have really 3 tokens that are live on VeChain Thor, which is it's the name of our blockchain, right? So we've got your utility token, which is VET, BTHO, which is a gas token, which is also a unique feature for us, right? We have a dual token model, if you will. And then there's the B3TR Better token, which is specific to this sustainability focused reward platform, which is the sort of direct to consumer or B2C or B2B2C platform. And for us, we just wanted to make sure that, most importantly, we just prioritize compliance. Why? It's quite nice not to have regulators going after you to the extent that they have justification. Is someone else's decision to decide, point to confirm. But I think it's most importantly just making sure that we're regulated in the jurisdictions in which we're operating. And I think most importantly too is it makes for much easier conversations. When I'm having conversations with folks where we can say, hey, we can just point you directly to the registry that shows you that these tokens are compliant, that we have that these tokens are also on platforms that are custodied by qualified custodians and things of that nature. It just makes for a much more easier conversation. See above, some conversations are shorter when we're looking for adoption versus some being much more longer. MiCA helps, or being compliant under MiCA has been very helpful from the perspective of just shortening the sort of go-to-market with partners, but then also when we're talking to qualified institutional buyers, QUIBs, it's much more easier for us to have that conversation when we have a notification that says we're registered and operating in good faith and within a compliant regime. That's really the short response there.
Yep. And how about you, Howard? Can you touch on ViewKey and ZPass and all those things of how do you explain programmable privacy to institutional compliance teams that are completely unfamiliar with ZK proofs, or how are you thinking about those things?
Yeah, absolutely. Actually, we were just in DC on Monday at this SEC event. The SEC hosted this crypto task force roundtable on financial surveillance and privacy. And this concept around smart privacy is something that we really believe is going to be essential for mainstream usage and adoption of the tech. The idea really comes from the premise that risk mitigation does not have a one-size-fits-all solution. And so this is currently true outside of the Web3 space as well. Every company has to approach their risks based on a myriad of factors. And with Aleo, we provide the ability for each company or individual even to determine their risk mitigation approach. And you have these end-to-end fully shielded transactions on Aleo, and you can have bank level privacy or banking level privacy. And for us, the real premise is to say we think that the choice is the major driver here. So if you need configurable compliance, you can introduce that. And we've worked with partners out there like Predicate, TRM, Chainalysis, Elliptic to really bring about different solutions. One area that we've really leaned in on is what we call compliant by design tooling. So the idea there is to introduce different techniques, whether they be policy engines or rules engines, that allow you to threshold, to control, to really understand the nuance of the flow of money in a privacy preserving manner, while also introducing things like ZPass, which are verifiable credentials. So that allow you to, for example, KYC AML a user without having them have to publish and post all their personal details onto a public blockchain. This is something that I think is a very novel concept in the space, because the technology has only just started to enable this in the last few years. And so, we really think of ourselves as trying to create the spectrum and allow people to build what they need on a stack like ours. And I think that this idea of smart privacy is going to be one that really helps to get the idea across for a lot of these institutions.
Yep, and if we also look at Plume, right? You've also built in compliance at the protocol level with KYC and KYB. Can you talk more about your approach to compliance native infrastructure?
Yeah, so I'll keep it really short. Mentioned before, we work with TRM Labs, work with Predicate to establish compliance logic at multiple smart contract levels, both the chain level and the dApp level. We also work with we announced a partnership with EY. They deployed their L3, which is focuses on CK privacy transactions. Really meant for an institutional use case. Can almost think of it as almost a dark pool, if you're familiar with how dark pools operate in the traditional world. Vetted and approved financial institutions can trade against each other in almost like a dark pool, right? So these transactions are hidden, they're not shown to the market, and then the settlement happens at the underlying chain level, which is Plume. And so, we're building very deeply with EY at the moment to establish interesting use cases for, these transactions that leverage and rely completely on privacy. So think about if you think about the interest rate swap derivatives market in the States, that is something, that we're looking at, as well as, high frequency trading, things like that between market makers. And we're very excited that we're working with UI, because I think it's definitely a compliant privacy solution that we needed.
Yeah, and on the privacy side, like a big sort of setback back in 2024 was the Tornado Cash ruling. What are your thoughts on this? How has that affected the conversations about your respective platforms with institutions or with regulators? How is that evolving?
Yeah, I'll just jump in and say that, when it comes to any new technology, including, ZK, there are always going to be good actors and bad actors. And, the analogy I like to draw is when you look at the early internet itself, you had technologies like Napster and like Spotify. Both were pieces of software that allowed you to download and stream music. One said, let's use this software to circumvent the system and allow users to listen to music for free. And then the other said, let's use this software and this technology to really plug in and plug into the music industry and create this immense billions of dollars of value for artists. And I think it's very clear which stood the test of time. I think when you look at a new technology like privacy tech here, you're seeing the same conversation happen again, in the sense that you had actors like Tornado Cash who were really trying to build a system that allowed you to circumvent regulators and circumvent governments. And then you have new types of blockchains, privacy preserving blockchains that are out there introducing compliance and plugging into financial institutions and working with policymakers. And I think it's going to be very clear which will, one, stand the test of time, but also create trillions of dollars of value. And I think that, from that perspective and that framing, it becomes very obvious that, this Tornado Cash moment really is a blip in time to demonstrate, it's almost like this Napster moment where it opens the door and paves the way for the Spotifys of the world to really come into the market.
Yep. Anyone else wants to chime in on the Tornado Cash? All right.
It was very well said.
Let's perfect. Yeah, and fully agree with Johnny. Very well phrased, Howard. So let's look at strategic partnerships. We've already mentioned some of the partnerships, and but let's really look at like big partnerships like Johnny, the $100 million UFC partnership, the BCG collaboration, like really melting this, it's like strong consumer brand, like enterprise understanding and deployment ability of a BCG. How does that contribute in building institutional credibility, and how do they complement each other? How do you think about those partnerships?
Yeah, look, I think ultimately the proof is in the pudding, right? So from our perspective, in those two relationships in particular, the UFC was quite clear. It's one, it's about awareness, it's about real world activation. But from that perspective, I mean, look, UFC has 1 billion folks in reach, right? And the item of consequence that had been placed to us at the ask had effectively been, how do we engage these folks? It's not really about driving folks to UFC.com or UFC app and having them buy more, Viper clothes or UFC gloves. It's genuinely about settling on how do we engage what is a very active and vibrant community who is committed to the UFC above and beyond, to the UFC and more broadly speaking, the TKO parent co. So that's WWE. That's it's professional bull riding, PBR. So the ask to us has been showcase how we can leverage this technology in a way that drives more engagement than your traditional approach of launching another Web 2 app in an Apple store and hope and pray to a certain extent for UFC. So that's what we've been. That's the remit or mandate that we've been given via the UFC side, and it's been quite positive. I think I spoke to one of the applications that we sort of incubated on and lives live on our platform, which is this BYP app, which follows the journey of certain fighters and allows for folks to feel as if you yourself are also on this journey for better health, better fitness, and in exchange for that, right? In exchange for being more engaged with the brand, right? So driving brand awareness, driving brand closing the proximity, the gap that exists between brand and user, or in this case, fan engagement. You're worth them, and they feel like they're a part of that experience, and that's how we've sort of incubated that particular relationship. For us, one drives sort of top of the funnel, the other sort of accelerates the adoption. And for us, we go back to the key metric primarily being bringing users. I mentioned assets online. It could be financial assets. It could be data. But most importantly, it's users. And we saw sort of the UFC partnership or relationship being a marriage of really sort of amplifying what this technology can do with a really engaged set of folks that cultivate a community, that drive brand engagement and close the proximity between brand and customer. And that's effectively what we've been doing with a lot of these relationships. So the proof is in the pudding, and ultimately it's about retention, it's about client acquisition, it's about client engagement.
Mm-hmm. Yeah, and I think that translates for you, Howard, and kind of like the ZK snark is in the pudding, right? What about your partnerships with Paxos, Revolut, Google Cloud, as a network validator, the global dollar network, right? The with like all the big names in there, like Robinhood, Kraken, WorldPay. What factors drive your selection process and forming those partnerships?
Yeah, well, first off, just to reiterate the point, Aleo is a private by default and compliant by design blockchain. In fact, we're the first purpose-built L1 to combine programmability, scalability, and privacy. And so, for us, a big part of our focus, it has been really embedding privacy at the core. And Aleo was designed to meet financial use cases. And for us, that means working with governments, enterprises, and fintechs that value confidentiality as a service. Teams that want to embed encrypted payments and data flows directly into their products, without custom infrastructure. And so, for us, a lot of the selection criteria is understanding the user journey and the product use cases that help to fulfill that. And for us, that's why we've brought to light private regulatory compliant stablecoins, whether that be for cross-border settlements and B2B payments, or looking at where we can reduce FX friction and remittance costs. There's all sorts of reasons why it becomes valuable to use a stack like ours. And so for us, it's really looking at the types of teams that are valuing this specifically in their integrations, and then working with them to build applications across TradFi, DeFi, consumer and non-financial sectors with that confidentiality by default, something that just isn't possible on transparent blockchains today.
Mm-hmm. And moving over to Ivy for Plume, you mentioned the partnership with Apollo, like deploying private credit with Plume. We've seen a lot of the you mentioned the EY privacy layer. There's a lot of other partnerships with BlackRock's Biddle, with Mastercard's StartPath Accelerator, Wisdom Tree, also launching 14 tokenized funds. How do you go about traditional finance giants, right? And like how much market size there is right now versus later with crypto native partnerships where there is sizable AUM sometimes, right?
Yeah, totally. I think, for us, we're really trying to bring some of the best assets on chain. So that means working with the best in class asset managers like Apollo, Wisdom Tree. And then, we figure out, okay, now we have these institutions working with us. What other partnerships we need to bring on to fulfill their requirements or criteria? So that's where EY came into play on the L3. That's where, we also brought in, MasterCard as well. We're part of their accelerator for, crypto startups, seeing some of the activity that they were doing in the stablecoin space. And so, I think we are in an interesting point where a lot of institutions actually are coming to us and asking for solutions because, I think competition drives competition, and they're seeing some of their peers, moving forward, notably like BlackRock and some of these other larger, asset allocators and institutions like State Street, for example, has been really, really active, Invesco. So they're seeing some of their peers and they don't want to get left behind. So I think it's been a great, almost like reinforcing circle of, asset allocators hearing about us, coming to us, asking for our solutions and plugging into our stack, seeing some of the success that we notably had with Apollo. So I would say, those are how we prioritize is, we want to bring the best assets, and then some of the crypto partnerships, if they can drive TVL, if they can drive transaction activity, if they can drive, user adoption, we'll definitely prioritize those.
Awesome. And taking a step back and, or step up and looking ahead, what type of exciting upcoming features or developments can you share with our listeners? What makes you excited about where the space is going in the upcoming year?
I'll just quickly say that I think this year has been, a huge momentum shift into the institutionals and into enterprises. We also have seen in this past quarter that private cryptocurrencies like Zcash are having a real moment in the crypto narrative, and I think that has started to create this new momentum, this new cadence for next year. Right now people are talking about private cryptocurrencies, like effectively the private Bitcoins of the world. I think next year we're going to start shifting into this conversation of, what is the private Ethereum of the world going to look like? And I think that means we're going to start to branch out into private stables, private ERC20s, private RWAs. We're going to be looking at private swaps, private smart contracts as kind of the general spectrum. And for us, the areas that we're very excited to be preparing announcements for really are going to be on partnerships with payroll providers, with payment providers, with trade finance partners. And I think that these are going to be some of the core tenets there. And certainly for the chain itself, we're also working with enterprise wallets as well as hardware wallets to bring on more integrations and adoptions for the network as well.
Yeah, I would say for Plume, legitimizing some of our vault infrastructure, which is the primary distribution point for our asset issuers. We also have a stable coin as well. It's called PUSD. We are looking to, have that potentially a little bit more legitimized, as the Genius Act has opened a lot of doors for stablecoin issuers to operate in the States, and then also just growing TVL across our vaults and onboarding new some of the largest institutions.
The largest one that I'm going to project out for 2026 is we'll have 10 million. I'll go a notch higher. 15 million weekly average users that are interacting with enterprises in a meaningful way by the end of next year, and that means they're doing activity via exercises on BYB. They're organizing community cleanups via our cleanup app. They're organizing coffee meetups via our Mugshot app. Like that's what I suspect. I know we have some we've got 3 or 4 that have already cleared the 2 million. I think that we're going to get 15 million by the end of the year.
That's pretty bold and exciting.
Why not be bold?
Totally. And well, speaking of bold predictions, Ivy and Howard, if you were to make one bold prediction about institutional blockchain adoption for 2026, what would that be?
I think for 2026, I think private stablecoins are going to be in the spotlight. I think institutions are going to start getting their hands wet with it. They're going to start playing with it. And I'll make an even bolder prediction by saying that I think by 2030, I think all stablecoin payments are going to be end-to-end encrypted and fully private. And I think that is going to be the default meta. And again, I'm going back to the analogy I was drawing earlier that I think this is going to be a massive HTTP to HTTPS moment for crypto. We're going to start to see this shift where people are going to recognize, wait a second, every stablecoin payment I'm making today is fully transparent on the blockchain, and everyone can see that, from whether it be my best friends, my mother, to a data scientist down the street. Everyone can see it, and I think suddenly they're going to realize, wait a second, this is not how real-world finance works, and we're going to start to make that shift over in 2026.
Yeah, I don't know if mine is controversial. I would say, short and sweet, stablecoin TVL doubles next year.
Awesome. And so, well, I think we're out of time here, but I just want to give you guys a quick opportunity to any additional thoughts, anything you want to share about your project. Feel free to give one last thought before we close out.
Yeah. Any questions? Check out our website, plume.org, and then check out our vaults, nest.credit. Those are our primary products, and feel free to reach out. Any questions?
Yeah, I'll say our website is aleo.org. Please go check it out. We'll be on the conference circuit next year as well, and so if you're attending Consensus HK at the start of the year, we'll be out there. I look forward to meeting with you all, and I'll certainly be on stage as well, and chanting the good word on privacy tech.
Sacha, this was great. Thanks again for hosting. So we can be found at VeChain.org and or vbetter.com. And then you can follow me at Johnny A. Garcia is my handle on Twitter.
Wonderful. Well, again, thanks everybody for joining. Remember that, proof is in the pudding, potentially with rainbow sprinkles on it. Thanks again for everybody for joining today. Thank you so much to our panelists. It was very intense and an interesting discussion. And we'll see you next time for our next webinar. Take care.